Welcome to the Smart Money Group's Follow the Money Report, a strategic briefing for healthcare, life sciences, and medtech executives and the advisors and investors who support them. In the next few minutes, we're going to give you a bird's eye view of how capital is moving across this industry. We're going to look at IPOs, M&A, venture capital, private equity, licensing deals, secondaries, along with some of the most consequential platform partnerships that are reshaping the entire landscape. Let's dive right in, starting with IPO activity. This chart shows 11 years of IPO activity, and the blue bars reflect the total dollars raised, and the solid line shows the total number of IPO transactions completed. You can see on the right that in the last 4 years have shown a nice steady uptick, with 2025 delivering 48 successful IPOs in healthcare and life science companies. And those companies raised over $14 billion. And most of you know that all indications are that 2026 will continue that trend even stronger. Let's take a look at some of the most prominent IPOs. The largest IPO of 2025 was Medline, who raised $6.26 billion. Caris, Lumexa, and Hinge each raised over $400 million, and Metsera raised $275 million, excluding the over-allotment. But there's more to the Metsera story, as you may have read about. The IPO happened in January of last year, and this triggered a bidding war that resulted in Pfizer acquiring the company in November for $7 billion in cash up front and up to $10 billion total. Now, that's an impressive run, and it's a strong indicator that deal-making in this industry is very strong. Now let's look at M&A activity. After disappointing volume in 2024, calendar year 2025 brought a return to near record levels, with 585 M&A deals completed, represented by the dark line, and total consideration of $269.3 billion. The light blue bar shows that most of the volume represented cash deals with no contingencies, which is also good news. Breaking down M&A activity by subsector, this chart shows in gray at the top that manufacturing and CDMOs led the pack with 203 deals. Then in green, we see 154 deals among diagnostics, sequencing, omics, and tools, followed by therapeutics and discovery platforms and devices. Next, we'll look at venture capital, which is the lifeblood of the growth required to scale and produce these exit deals. This 15-year chart shows that in 2025, venture dollars invested was essentially flat at $36.3 billion, shown by the orange bars, and the line shows deal count with a slight downtick, with 1,827 life science companies that closed venture capital fundraising deals last year. However, the really good news in venture capital is the amount of new life science dedicated funds raised by VCs in 2025. Last year, life science dedicated venture capital funds raised over $12 billion, led by well-known names in the industry. Frazier Life Sciences raised $1.3 billion for their fund number 12. Omega Funds raised $647 million for life sciences in their fund number 8. Cataleo raised a fresh $400 million in fund number 4. And a unique partnership between Silicon Valley powerhouse Andreessen Horowitz and Eli Lilly brought a fresh $500 million to the market for their first biotech ecosystem venture fund. But venture capital isn't the only source of cash to fund growth. Licensing deals jumped 31% in 2025 for a record of $250 billion of licensing deals. The bars show the dollars, and the solid line represents upfront cash, coming in at 7% of deal value. Now you can see that 7% is off from the historical high in 2020, but the next slide shows that these dollars are still a significant source of growth funding. We hit a 6-year high last year in the number of licensing deals that delivered over $100 million of upfront cash in each deal, with 41 deals. That's at least $4 billion of non-dilutive cash, and I really encourage everyone to think more about how licensing deals with significant upfronts can be a fantastic source of growth capital. Another trend we've been watching across all industries is the rapid growth of secondary market transactions, providing partial liquidity to investors and management teams. This chart shows the dollar volume of exit transactions by type for calendar year 2025. On the left, you can see that secondaries delivered approximately $94 billion of liquidity last year. In the middle, IPOs delivered over $104 billion, and M&A deals on the right delivered over $107 billion. Now, this chart is for all industries. I don't have the breakdown, but the key takeaway here is that secondary transactions have essentially established themselves as a viable third leg of the stool when it comes to providing liquidity for investors who've been upside down when it comes to distributing capital returns back to limited partners. And the trend is strong and likely to continue. This 13-year chart shows the growth in the number of secondary deals across all industries. Starting on the left, in 2013, there were only 26 secondary market transactions. On the right, 2025 delivered 226 deals. And that reflects a compound annual growth rate of approximately 20% over the 13-year cycle. That's an impressive run of growth, and it's fair to say that all of us should be paying more attention to secondaries as a legitimate form of liquidity. Now, there's one more trend that's emerging that's really important for everyone to take note of, and that is the cross-industry partnerships and platforms that are changing the way that drugs are developed and brought to market. One tangible example is AstraZeneca, who has stitched together at least 10 partnership deals across the last 18 months across multiple functional areas that we've mapped out here. Starting at the top left, you can see that AstraZeneca has partnered with Tempus AI on precision medicine and data, and all of the way around, they formed key partnerships in AI biology, RNA and CRISPR, and on the right side, you can see partnerships in drug delivery, clinical trials, imaging, and compute. And speaking of NVIDIA on the compute front, I encourage everyone in the industry to take a closer look at all of the partnerships and investments that NVIDIA has put together. NVIDIA's BioNeMo platform provides access to deep data and computing models for the entire scientific community, from synthetic proteins on the left to libraries and tools in the middle, and virtual screening and blueprints on the right. The BioNeMo platform is unmatched in its depth and breadth. And the NVIDIA partnership ecosystem is equally impressive. On the upper left, you see at least 14 partnerships in AI drug discovery. In the upper right, you can see another 10 in data and AI agents. And at the bottom, 6 more partnerships in laboratories and robotics as well. No longer simply a vendor to life sciences, this next slide shows agentic systems spanning the entire healthcare experience. From left to right, their agentic ecosystem covers patient experience, virtual care, patient monitoring, analytics, and more. And the one question I'll leave you with on the partnership front is this. If you're not currently partnered with NVIDIA or experimenting with their BioNeMo platform, I'd encourage you to explore the question of why not. Because one thing is clear from everything I've seen is that the industry landscape and the rules of the game are very different than they were just 2 years ago. Now, obviously, that was a lot of information, so if you want to dig deeper, please hit this QR code right now to download all of these slides, and feel free to reach out to me with your comments and questions. And lastly, if you can think of a friend or colleague who would find this information helpful or interesting, please send them a link to this video. We really appreciate you helping us spread the word, and don't forget to like and subscribe, and we'll see you soon for another Smart Money Group production.